Welcome back, everyone, to another episode of Living Your Greatness. This is your host, Ben Mummy. Today, we have a new guest of the show, and his name is Frank Holmes. So for those of you that don't know Frank, he is the CEO and Chief Investment Officer of U.S. Global Investors, and he is also the chairman of HIVE Blockchain Technologies. So Frank, without further ado, before we get kicking today, super excited to have you on. Welcome to the show.
Well, thank you. Thank you very much. It was a pleasure meeting you in Quebec City.
Yeah, totally. Super cool to meet you at VID. Finally get to meet you because I've been following your work, for the last, I would say, 4 to 5 years, and really appreciate the impact that you've had on myself as a millennial investor. So before we kind of hop in, Frank, I think it's important, for my listeners here, tell us a little bit about yourself. Where did you spend your formative years growing up, and what inspired you, to become a world-class investor, entrepreneur, and philanthropist?
Well, it's luck. It's hard work. I would say that I've been blessed with my parenting. The parents were phenomenal. My mother was a nurse. She studied in Montreal. And then she went on to become an activist educator. And she was elected for the Board of Education in Toronto. She did a lot of social work. And so you learn about the importance of community. Every Christmas was always giving out Starbucks to all the poor. And I thought we were poor, but there was always someone poorer. But we were rich with love and rich with a push for education. So I've got to really thank the parenting. And my guardian father is an Anglican priest in downtown Cabbagetown. And the same thing was I had to go to university, and I had to go to Jarvis Collegiate, which was the best school in Toronto. And most of my friends down in that era in the 70s were reluctant to go to a school like Jarvis. So it's interesting. Your parenting is so important, and I think it's when later on in life you learn it's a trade-off between what you know and who you know, and you have to stay very curious all the time, sort of the x-axis and the y-axis, that you're learning something new and you're meeting someone new. You're exploring other people's journeys and what they did and how they resolved, and the ability to bounce back after setbacks and be motivated to innovate. At the same time, you have to go and study. You have to learn the basic sciences. And I was going into medicine, and I never at the beginning thought that all those maths and all the sciences, they would really help me later on being an investor. Biology is really about the entrepreneurs. And there's a wonderful book by a professor from Harvard called Biology, but Bioeconomics, and explaining how biological models explain the entrepreneur the best. And when you go to become a quant investor and using quant models, then you really have to appreciate physics, momentum and gravitational forces, and how prices move and what they move. And a lot of the algorithms relate to rules of physics. When I look at macroeconomics, we always think of force equals MA, the mass. So how can 4% of the world's population, America, be so powerful? It's because its GDP is so powerful. It's 25%. So when it torques, it starts to accelerate. This little 4% of the population is a big force. And then when you turn around and see China and India with 1.4 billion people each, that's big population if we go back 30 years ago. But now we have them, their GDPs per capita are rising. China's exploded on a relative second biggest GDP in the world. So it now becomes a huge force because the mass of the population and the mass of its GDP. So it's looking at those laws of physics. You just don't realize over here you're studying those rules, and calculus is all about momentum and acceleration and deceleration. So I think that people really have to, when you're a young person, is dig into what you're learning at school, and also the culture. I learned everything about this crypto world in the past 5 years. It's a complete different culture. It's recognizing it's a metaverse on its own. That you literally go to a conference where it's crypto, and it's a complete different world, and it's all over the world. It's not something just happening in one location. So there's a curiosity that takes you there. And then when you study chemistry, Chemistry is all about the release of energy or the absorption of energy. So is exothermic or endothermic reactions. Well, that's what happens when we meet, you and I meet. Am I giving you energy or am I absorbing your energy? Am I inspiring you or am I making you feel exhausted? That's a transfer of energy. And all that comes from those models of chemistry. And when you start to see that boring stuff you thought was science, actually it works in the real world with people, places, and the resolution of issues.
I love that, Frank. Thanks for giving us that background of, who you are, and, very humbling, as well as, those small things that you appreciate, whether it was from chemistry or biology. And a key word that you used was, models. And something that I'm big on is I'm big on mindset, and no matter what real world, problem, we're trying to unpack or get better at, or skill set, is finding ways of, applying mental models, right? And so a question I have for you that I'm curious to ask is, when it comes to behavior economics, right, which is hugely part of like the investing world, what are some, mental models that you've applied, to strengthen your success as an investor?
Well, I guess the thing is to learn that there are leading indicators and there are lagging indicators. Most people follow GDP and GDP per capita, but that's a lagging indicator. That's what's happened. It's being curious to find out what are strong leading indicators and can they help you make better decisions as a money manager. And I think that's the operative word is anticipate before you participate, before you take the risk, before you make a decision. You have to break an egg. You have to think of that, the concept, but you want to be thoughtful. As you said, the special word is mindful. I think when you use the word mindful, it's also very important to have some spirituality, have time for prayer and for meditation. It's a very helpful grounding. And when you get really confused and you get bombarded from so many different demands, I've got to flip from doing an interview like this and then going to make a board decision and then making a capital decision, merging trusts, so your brain has to flip over, and sometimes it becomes overwhelmed. And the best way for me to deal with that is to go into meditate. And Ray Dalio talks about this all the time. And it's also, for me, it's prayer. My own sets of prayers, and I learned that discipline from my father and my mother. So it doesn't matter what religion it is. It's regarding, you need to have peace of mind, and you really can't have on a macro scale prosperity if you have war. You have to have peace. Peace and prosperity go together economically, and peace and personal health prosperity go together also. So the operative word is you need peace. And mindfulness and prayer meditation helps you get to that, okay, I can resolve this.
I love that. Yeah. No, Frank, thanks for sharing, those mental fitness tools, that keep you kind of grounded, as an investor. And, for myself, when it comes to mental models, it's enhancing every day my circle of competence, right? Interviewing people like you who are specialists in the space, who invest in the areas that I also believe in or that I'm looking to learn more in, right? So circle of competence is a huge one for me. But something that I want to kind of now shift to is, you have a lot of experience, Frank. You've been an investor now for many years, 30 plus years. And, as the CEO and chief investment officer of, the US Global Investors, a question I have for you is like, what is your general overview right now of the economy? And are there any key indicators or trends that investors should pay attention to at the moment?
One of the big things is to have the mindset you talked about earlier is bad news is good news. And you have to have that thought process to say, can I buy something really inexpensive that will have this mean reversion? It will bounce back to the mean. And once again, we're coming back to laws of physics of mean reversion. And it's recognizing. So when we look today, there is so much negative news, and with Putin and Ukraine and And the negative narrative was taking place with China and America has its own, is always very, it's like a hockey game. I try to explain to people as a Canadian that's been in Texas for 34 years and have a dual citizenship. Everything is a sporting event in America. Sports, it relates to politics. It's a punch out. And once you recognize that, then you see, okay, that's how everything happens. But with that, you get all this negative narrative. But I would say the JETS ETF we own is a leading indicator, which is extremely positive. I like to go to big data sets. If we go back 50, 60, 70 years, in the third year of a presidential election cycle in America, being the largest GDP in the world, it has a very well-defined 4-year presidential election cycle, which impacts not just domestic, but the world. And in that cycle, it doesn't matter if it's Democrat or Republican, it's their policies you have to focus on. It's government policies. Are they expansionary or are they contracting? Are they increasing taxes or dropping taxes? Increasing regulations or dropping? So that model goes to monetary fiscal policy, 2 drivers for monetary, 2 for fiscal. But forget all that complex stuff I just told you. In the third year of a presidential election cycle, when the president is a Democrat and Congress is a Republican, there is a 95% probability the market's up 8%. So I like to a long-term data set to say, wow, and the market's up year to date. It's totally contrary. Our JETS ETF is outperforming the S&P 500, but the world's coming to an end. Rates are going to rise more. Everything's bad, but something else is happening that's very positive. Now, JETS is a leading indicator because it fell before the lockdowns and COVID. Buffett capitulates in June of 2020 and says, get out. And JETS goes from $11 to $28. It basically forecasts the vaccine coming on side. And as everyone got vaccinated in America that wanted to get vaccinated, that whole move, well, by that time the stock was, with the ETF was $28. And then it went through this correction and now it's coming a big surge back year to date. So it's a leading indicator. What's a negative leading indicator for me? And I write about it every month. It's called PMI, Purchasing Manufacturers Index. And basically, it's a survey of people that are going to be building electric cars or motors or tables, and they have to then order equipment, metals, commodities. They have to use energy, and it takes about 6 months. So the 6-month leading indicator. Last year, we had a surge in China in the last quarter, and China in March of this year fell apart. It fell below 50. And immediately we saw oil fall. We saw copper prices fall, steel prices fall. Why? Well, China consumes 55% of all the world's commodities. So the relationship is very strong with commodity demand and purchasing manufacturers index, which is highly correlated with commodity demand. So it's looking at that leading indicator. And then when we go to Europe, their PMI, especially the most significant manufacturing country in Europe, is Germany. Well, during COVID, it fell to 32. It's now 42. It was 56. So it has fallen down. And so the negative news means they're going to stimulate their economies. They have to fast track. Otherwise, you're seeing a series of right-wing conservative governments coming into power in Europe. And you can see that in Eastern Europe, the concern over Putin and the concern over economic policies. And so that bad news is good news because they're going to print money. America is now with get its budget in order, and a ton of money is going to go into climate change spending. And that's going to have a big impact. So I like to look at those leading and lagging indicators. And I share with you, PMI is bad. It's shocking, but you're going to see China's been devaluing their currency. You're going to see them come up with a stimulation between now and October. You're going to see stimulation coming out of Germany. And we're going to go this time next year for the 4-year presidential election. And Biden's running for a second term. So you're going to get this money printing that's going to go on to get the economy moving. So look for those pockets of opportunity. And that's what I like to look at. And the big part to show you how much money in the system is AI. You know, the market cap of public companies in the AI sector have appreciated in the second quarter of this year by $1 trillion. 1 trillion. That's not a bear market. And the fastest adoption has been is GPT chat is the fastest adoption of a new app online, which took 2 months for 100 million users. So something big is happening there. And I think when we go back in Montreal, well, Montreal was way ahead of it. In fact, I was involved in funding and taking the first AI company for mining public, and it was based out of Montreal. It was called Goldspot, and it's changed its name and its focus, and I think they sold off their AI business. But the idea of applying PhDs in geology and engineering and structural geology and using AI to de-risk a mining exploration project so that you don't waste $10 million looking for something, you can de-risk it. And I think that that hub is Montreal, and I think that that's going to be a significant play because the universities are behind AI, and they've been there for about 20 years. So I know this in San Antonio, Texas, where I'm based, and the university there focused on cybersecurity. Well, guess what? NSA has 3,000 high-paying jobs in San Antonio because the #1 university for cybersecurity is in San Antonio. So if you have the intellectual capital and the training and the skill set by the school system, then businesses like Google and Microsoft are going to build a campus in Montreal because people aren't going to leave to go to Seattle. So they come to Montreal, they create jobs because this is where the intellectual capital. So there's these pockets of incredible opportunity. And clearly AI is bigger than that most people really are putting their arms around. And I have friends now, and I have to keep the discipline. They're spending an hour a week doing nothing but learning how to use GPT chat.
I love that. Well, you know what? Lots to unpack there. You know, you brought up, you know, a lot of main things right now from a macro perspective of what's going on, you know, and I love that you brought up the whole, you know, just supply and demand and why there's an opportunity right now for commodities. And then I love also too, something that I value about you is you do a really good job at staying with it with new trends that are emerging, right? Like AI, right? Technology, blockchain, right? So, you know, those are obviously areas that you know really well. So I love that you brought up these other opportunities for investors, you know, to be more aware about as well as familiar. And something that I want to kind of pinpoint based off of that is, you know, if we think about commodities, you know, I know you've spoken a lot on Kiko News, and there was an interview probably 2-3 months back that I know that you were pretty bullish, you know, saying for like the long term in terms of, you know, gold equities as well as the commodities space, in terms of, you know, what's to come in the upcoming year. So a question I have for you is, you know, why should, you know, any investor, you know, have gold in their portfolio? And how can they be patient, you know, for the whole narrative, I guess, to play out?
Well, first of all, is remember, don't get caught up with a political party. Doesn't matter what country you live in. Get and appreciate their political policies. And it's a simple, like the internet is zeros and ones. It's a binomial model. So government policies bifurcate to either monetary or fiscal. Monetary bifurcates again. You got like a tree diagram, and it's either money supply or real interest rates. It's either or influence the monetary policies that influence our lives. And then when we look at fiscal policy, and that is going to be tax and regulations, because regulations are a soft taxation on the economy, and it's spending. Where are they spending money? So you can see wherever government starts directing its policies, you can see huge increases in job creation. And to me, it's looking at those policies, which are very important, and you can see it show up in the stock market in industry categories. You can see it show up so quickly with the infrastructure spending. So when that infrastructure spending starts to get torque in the US for climate change, I believe the silver prices will take off. And when you get the PMIs of China above 50 again, this is where you get the huge torque. It's recognizing these policies do influence outcomes, and policies for education in the sciences are so key to remain globally competitive.
Absolutely. No, a lot of investors still though are like, okay, we've been hearing this for a while, Frank. It's still not playing out. It's been a big pullback since,
Yeah, but
2020,
let's
right?
like okay. Let me finish my thought with so monetary fiscal policies. If we look what happened this century, it was the practice and encouragement by the G20 central bankers and finance ministers to practice MMT, modern monetary theory. That means just spend as much money when you have a global crisis and throw money at it. So what has happened this century is that gold has outperformed the S&P 500 2-1. It's hard to believe that. And the largest hedge fund in the world is Ray Dalio's Bridgewater, and he's a gold bug, and he has a 10% up to 25% weighting, but he's doing a parity trading with it. But gold is always sort of the rudder in his portfolio. And it's recognizing that the biggest hedge fund, one of the smartest, most articulate speakers, has written extensively. He's got a great YouTube selection of how he views the economy, very educational. I think it's helpful for your viewers to go to Ray Dalio and watch that video series he has and how he looks at the economy and how it works. But remember that he always has this gold weighting. I call it the 10% golden rule. Always have 10% rebalance each year. Now, the gold stocks, they had a spectacular run in the first decade, and then they start to fizzle. And what we saw with the gold stocks relative to bullion itself is that a lot of them started just making acquisitions and mergers. And yes, those mergers increased their revenue and cash flow in a macro number, but on a per share basis, they didn't. And the quant world looks at the value metrics on a per share basis. So when you do a merger, then you say a merger of equals, well, it has to be accretive. And if it's not accretive, it takes 18 months to 24 months to all of a sudden see it become accretive. And then that gold stock starts to get better valuation metrics. In our models of Go AU, Go Gold, which is our sort of quant approach to picking gold stocks and royalty companies listed on New York, that model doesn't own Newmont because yes, it wants to become, now it's the biggest gold producer, but the dilution on a per share basis that makes other gold stocks more attractive. And it's recognizing that. So gold stocks have been a disappointment, but what has not been a disappointment have been the royalty companies. And that was my first case work ever doing, was that I'm so blessed to have met Seymour Schulich and Pierre Lassonde as a kid when I went from a junior analyst over to my first banking deal. And I took Franco-Nevada public, not realizing at that time what it was going to be. But I had two incredibly brilliant people that were like mentors, and they have been friends and mentors. What they've done for the community of the country, their philanthropy, from the billions of dollars they've made when they've given back, but what they created, it was really quite remarkable. So the royalty companies have far outperformed Berkshire Hathaway, and so you can see that the revenue model of a gold mining company like Newmont is $600,000 per employee. Franco-Nevada has royalties on their Nevada assets, and they traded $34 million of revenue per employee. I'd rather have the Franco-Nevada intellectual capital model that's overlooking those assets. And the same thing with Wheaton Precious. That was a creation I was on the ground floor with Ian Telfer, and it was and GMP with G. McBurney. It was one of those great ideas, because at that time Franco-Nevada had been absorbed by Newmont in 1999, 2000, and then it went public again in 2008 as a spinout, and it's far outperformed Berkshire again. So we hear about great investing and great investing models. I lend my hat to gold. and I lend my hat that you should have at least a 10% weighting, and it doesn't matter what your age is. If you want really conservative, 5% bullion and 5% high quality gold stocks.
Yeah, no, I appreciate that, Frank. I'm happy that you also commented on, the 10% rule, from Ray Dalio, his principle, right? Key kind of move there for his investments. But then also diving a little bit more specific, right? And talking about both through the gold, investment, as well as, through mining stocks, and giving some examples of some world-class, companies who have done some really great work, especially Pierre Lassonde, that's a great example of someone, at Franco Nevada. But, still though, I want to follow up with another question, in terms of, let's say Wall Street individuals right now, investors, they're not really caring or giving any love at the moment. And right now, it is a current time where the market is kind of unloved, in this sector. And someone who I admire, who I know you also know well, is Rick Rule, right? He always talks about how bear markets are a great opportunity for a bull market to come, right? So a question I have is, when do you see, I know timing is really hard, but when do you see in general that, more investors will get more interested in this undervalued, space?
When it comes to precious metals, I think you're going to have to see gold clearly go through 2,200, 2,300, and then all of a sudden there'll be that sort of wake up call. But what is really interesting to me in learning about the crypto space is that Bitcoin and gold, they're decentralized assets, just like Andy Warhol art. There's no one controlling Warhol art or one price. Is decentralized, and Bitcoin is decentralized. The same thing happens with media. Media was basically CBS and NBC and ABC in the U.S. and two major newspapers, New York Times and Washington Post, and so you see these are very centralized sources, and then Fox News gets in and it becomes the other opposite, but it's very centralized. Now you come with decentralized. BuzzFeed comes out. It's a Harvard case that it becomes more valuable than New York Times. Why? Well, because the articles are more shared with other people, and it's all about content marketing and content high quality writing. And then you see Reddit, Twitter. These are all decentralized sources of media. And what I discovered in this journey was YouTube so significant for our ETFs, in addition to HIVE, that the analysts from the big banks in Canada or in the US, the compliance, which is so important, but at the same time, a lot of the research gets scrubbed down. Everyone's afraid that they'll be second guessed, and so it becomes helpful in analysis, but it's very formalistic, and you don't get that sort of future-looking narrative storytelling that you're going to get from independent analysts that are on YouTube. Now, some of them are always going to be hucksters, but there's some high-quality people that do great information and do their own analysis. I've seen that in the crypto space, where they do some people really are diligent, and I can look at what they produce and compare, say, what HIVE releases. I've seen it now in the gold space, and what I recognize is that during the crisis of COVID, is that a lot of millennials and young people were going to YouTube and to Reddit and to Twitter to get their information on the JETS ETF. But everyone on Wall Street was negative. It was, jump off, off the bridge, forget it. The airlines will never come back. Warren Buffett capitulates, and that's where JETS goes from $11 to $28. Who was right? Were all the Robin Hoods. Well, where did the Robin Hoods get their research? They did not get it from Wall Street Journal. They're not reading that. They're following interviews like this and following podcasts. They're on their Peloton, working out, listening to a podcast. And they're getting sort of these interviews and insight and making decisions. So decentralized forms of information, like what you're doing with me and the interviews with Rick Rule, etc., are very, very helpful for people to get granularity and insights. So I think that you have to really appreciate it. Now we had in the mining boom has really been in lithium. Lithium stocks have been on a tear. The operative word for a public company to get volume and liquidity is called price discovery. And you need to have minnows really to picking away in little pieces, and with fractional shares, and people like Schwab is now doing it, Fidelity is doing it, but Robinhood really took it to another level in the US, where you can spend only $1,000 per fund or per stock, and you will get a fraction. So that idea and that concept, you can see, was sort of a revolution where people have said, hey, I listened to Graham Stevens and I can buy a Tesla, and the Tesla I only have to spend $60 a month because I get all these credits. And this people, the kids living in California, so they all go out to buy these Teslas at a very inexpensive price. And then they realize about Tesla, what makes it different than a carbon car. Then it's now they need lithium, and they start reading that lithium's in shortages, and they go on Robinhood and they buy a lithium stock, only $1,000. And so they start doing their research, and they go to places like Seeking Alpha. They go to YouTube and they type in lithium story, lithium stock, and they research themselves. They do their own research, not following Wall Street or Bay Street analysts. And so we then have these minnows coming in on lithium stocks, and you've got price discovery. With the minnows come the tunas, and the tunas come the sharks, and then the sharks come the whales. And now you've got big institutional money, and the bankers are all happy because they're doing these $50 million, $100 million financings and 6% commission, which they need to pay all those salaries and that whole infrastructure. But you need the minnows, and the minnows are not coming in through their research, or especially the big banks. They're not going to really be covering lithium junior mining, but it's through interviews that you're doing with a new lithium CEO company that's telling a story. And that's what's really important, is these decentralized sources of media information.
Thanks for kind of, exploring there, going there, really diving deep. And, a question that I want to ask you that I'm curious to ask is, a lot of people get uncomfortable, sometimes when they hear, let's say blockchain, technologies or cryptocurrencies, because they haven't taken the time maybe to understand it. How do you see, blockchain technologies, adding value for an investor, and like the future of like the finance world?
Well, there's some mathematical formulas out there they call particular Metcalfe's law. And Metcalfe's law is about the adoption, and it's been applied to the use of cellular phones, or how BlackBerry first took off rapidly, and it grows exponentially with adoption, where the demand is far greater than the supply. One of the best examples in resources are diamonds. If we go back to 1937, the Oppenheimers controlled De Beers. They have a mega diamond, high-grade quality discovery in South Africa, and they don't really do anything about it until 1947, after World War II, and they hire Ayers & Co. in Madison Avenue in New York City about the idea of branding diamonds with this special intangible thing called love. It's intangible. Now, how do you validate something love with something that's tangible? And you do it with a diamond. And who's done that? Well, royalty families, and then a few movie stars. At that time, only 3% of Canadians and Americans were showing a diamond as a commitment for marriage. This intangible with validated with something tangible. So diamonds went from $10 a carat to $100 a carat to $1,000 a carat to $10,000 a carat, while De Beers controlled the supply of diamonds. And the adoption, 80% of women and men in Canada and the US expect a diamond for a commitment to get married. Really interesting. De Beers did it again in the 60s in Japan. 3% of the population, are using diamonds for commitment, and all of a sudden today it's 80%. The difference was the Japanese women felt the color of their skin that platinum was reflected the diamond better. So the platinum market started to take off for the use in platinum rings, and in particular came out of Asia. So you see this adoption, and then the Russians found big kimberlites and they started flooding the market with diamonds. And then all of a sudden you start S1, S2, S3, V1, V2, V3. The market went through a difference, but you're now seeing still this 80% number works with diamonds. So whatever you limit, Bitcoin's capped at 21 million coins. And as more people accept digital money, and that grows, and what you're seeing is that young kids that were gamers and they were very good at it, they were getting digital money. My age, we played Monopoly. We had paper money. We never could buy another, if we were really good at Monopoly, buy another game free. But in the digital world and gaming, you get dollars, digital dollars, and you can get new software and games with that money if you're good. You have to be good now. Meritocracy works in that space. So you're now seeing they're older and they're used to digital money. The closest thing that my vintage would be in the digital money would be airline points. And the airline points are just the classic of fiat of the devaluation of paper money is a devaluation of your points. You know, it used to cost you only 20,000 points to upgrade and get a first class ticket. Now it's 200,000 points. So the value of your flying, what's happened is that you're seeing the degradation of the value of those flying points. It's really, to me, interesting. But I could give them to you. They were portable. I could give you Bitcoin today. I could pass it to you. So the idea that I could pass on a digital number from my mileage points was the sort of adoption process. And I think it's predominantly your age has been critical to it. My epiphany was when I went to New York to a consensus conference, and there's 5,000 people, and the biggest booth was IBM. And two, Abigail Johnson is one of the richest women in America that controls Fidelity, and she's a CFA, and she was a tech analyst, never speaks at investment conferences. And she's the keynote speaker. And they've been mining Bitcoin in Quebec. So you're going, wow, 5,000 people spending $800 a ticket. You would never see that for a junior mining conference, even when gold was flying. Even when you get the biggest conference was 2,000 people in Vancouver. The biggest retail conference I know in mutual funds and ETFs is in Orlando. It's free. People don't spend $800 or $1,000. It's free. If you started charging that number, you wouldn't get it. But not with crypto. You get a complete, so something big was happening when I went to England. I went to a conference. And the same thing in Singapore. Wherever you go in the world, there was these conferences that were expensive and they were jam-packed with people. So that told me something else was happening outside, like in another metaverse of what was going on. And that's where I became fascinated of this concept of digital wealth. And it's an intangible, because you can't see it unless but you understand it's made with electricity, and the same thing with gold. But like I showed you my gold boxing gloves here, for the gold investors to keep punching away at it, but it's tangible. And that's the big difference between it, and people want to have something that's intangible, and I try to use the metaphor of love. Love is intangible. But if you accept it, and as a cultural basis, and young people grow up with playing gaming and they accept digital money in their games, they're accepting Bitcoin and they're accepting these other tokens. So that is the big difference. Now, in the crypto industry, there's a bifurcation again. Proof of stake, proof of work. Proof of work uses electricity. Proof of work is like a brick of gold. You need electricity to make that brick of gold, and you need electricity to make that Bitcoin. Proof of stake is like having Excel sheets on the blockchain steroids. But in my journey of learning about this business, I was amazed that blockchain was invented by or created by two brilliant scientists at Berkeley in '91, before the internet was released. in 91. And it was basically the concept of putting a block of information that was protected for moving of money. And then 10 years later, the DARPA in the US, the Defense Department, comes out with an encryption called SHA-256. Well, what's SHA-256? It's on my cell phone. It's on your phone, and it's for facial recognition. It's an algorithm. So what's on your phone for facial recognition is basically the fusion of the blockchain with SHA-256, and 8 years later is Bitcoin. And it's capped at 21 million coins, and it has this unique encryption to it, but you need electricity, and it's competition every 10 minutes. It's the idea and the model of it is like Ray Dalio says, it's like Mozart's 21st symphony. It's an incredible algorithm, and it relates to, and I don't think it should push away gold. I think they're both important decentralized assets, like having an Andy Warhol piece of art. It's a decentralized asset.
Lots of great points that you brought up. Super interesting too, especially how you compared the digital wealth of one of them and then the other one in terms of the physical, tangible that we see, right? So I appreciate that explanation. And something that I want to shift to is, you brought up earlier, the importance, right, of following quality content, and people out there. And I know you're a big fan of Daniela Camboni, right? And I guess a question I want to ask you, if an investor is like, okay, I want to try and improve my thought process or my investment decisions by investing in any of these spaces that we talked about today, but they're still, unsure, worried, all that stuff. Who are the most trustworthy interviewers out there that deliver content, in the investing world that you think they should pay close attention to?
Well, I think that Danielle's a journalist, and so she grew up in Montreal. She speaks 4 languages. She studied in Rome, Italian family. So she has that multiculturalism, and she has a degree in journalism. So she has this higher level of ethics and concern about it. And so she's very thoughtful about who she's going to interview. And I think that that's what's important. And she's not shy of asking questions, but she doesn't want to just confront for the sake of confronting. She's trying to walk down for exploration and discovery, like a drill hole. She's looking for information. So I think that she's a special person in that context. There used to be a guy on Bloomberg, Pim Fox, who's also a journalist, and he did incredible research before he interviewed you. And he would ask you in sort of controversial questions, but not in a bellicose way. Like, he's smarter. He wants to know that this is what he's read, and is he off base, or what do you think? And go down a path of exploration. And so I think that people like him and Daniela do a very good job of they're not trying to promote a stock story. They're trying to promote awareness and discovery and curiosity. And these are very important elements for a good journalist.
Awesome, Frank. Okay, so those are great names. And I love that you've added, the curiosity aspect of both of them, of trying to figure out, where to go, where the smart money is going, to make better decisions. And my next question is, in, a couple of minutes, what do you think makes a great investor?
There's a wonderful book by Hagstrom, who's a fund manager, and he wrote a book on Buffett, but he also wrote a book, which I think is just one of those easy reading, phenomenal books called Lattice Works. Lattice Works explains that you have to have an appreciation of different models of thinking, from political models to philosophical models to investment models, and it's the lattice where they connect, and that you understand behavioral psychology. Behavioral investing is a new science created in 1985, and there's now been several Nobel laureates that have received for their behavior finance research. It was created, like I said, at MIT in only 1985, that concept. So you want to be thinking of how you create your own lattice work of what you know and who you know, and always stay curious about what you know and who you know. And when it comes to hardcore investing, I think one of the best newspapers is Investors Business Daily. You can get the app. It's IBD. They publish the paper once a week. It comes on the weekend, and it's an excellent paper because they have a model that's both technical and fundamental. And then they do the interviews of the CEOs of the best performing companies. And then they look at the strongest performing industries, and they explain the fundamentals that are driving that. And they explain when they do the interview of the CEO, which is driving such as in this huge jump in AI stocks. One of the companies that we use their servers as Supermicro systems, and it's recognizing. So who's the CEO? Well, they're going to give you this great explanation of where he went to school and where he grew up, almost like a Wikipedia, but it's all on their page of how it relates to investing. And I think that that's what's important for investors, and psychology. So you go to university, one of the key courses, Psychology 101. Well, highly recommend that for everyone because it relates to your personal life, but it also relates to the psychology of investing for the public. And the other book would be The Wisdom of Crowds by John Sorowiecki. Easy reading, and it explains why the stock exchange is so important, that and how the average price is actually quite accurate. When the crowds have groupthink is dangerous versus when the crowds are wise. And he gives case study after case study. And what you're seeing today is the new word is called quantamentals, where you're appreciating the math and using hardcore math to look at the momentum of stocks and economy. At the same time, the fundamental analysis of the leadership, along with the balance sheet and the income statement of the company, and you try to put those together. Investopedia does a good explanation of the word quantamentalist, and I would say that I'm a quantamentalist.
I love that, Frank. Thanks for, both of those answers. And yes, I have read actually like the latest work of mental models, actually by Charlie Munger as well as Warren Buffett. And I totally agree, where I think people need to have stronger minds and kind of do their best job at kind of eliminating biases, to help them understand, the investment world and understand how to make investment decisions, because every decision you do make is a big deal, and so I appreciate that. A follow-up question I have is, what is your definition of greatness? Like, my whole journey here is to really inspire people, to really become the best version of themselves. So what is your definition of greatness?
Well, greatness would be someone that is a good stewardship and leadership and ethics, and personal well-being, that you're balanced from your family, from your health, that helps keeps your energy levels up, and make sure you greatness comes from, I think, Dennis Waitley, who's a psychologist, wrote a book on seeds of greatness, and really does a great job of defining what he looked at, those people that are overachieving. They push themselves to learn something new. They push themselves to try some type of a new sport, go to something try new food, a new restaurant, that curiosity, that exploration. I think that lends yourself that you become greater as a person.
I love that answer, Frank. And, now that, Frank, you've gotten a feel of my show, what it's all about, I know you have a network of incredible people as people first, but who is, a future guest that you would like to see on this show that you personally know?
Well, I give you one of the things. When I left Toronto in 1990, moved to San Antonio, Texas, a friend of mine is a lawyer, went off to create a wonderful business for Service Corp, and he's received the Order of Canada. Jay Hennick is his name. Guys like him, he was a member of YPO, Young Presidents Organization. And it was so important for me because I didn't know anyone really in San Antonio, Texas in 1990. But I joined this organization because I met a criteria of how many employees I had, my assets, and my revenue. And immediately I had 65 other CEOs that became friends. And the YPO includes your spouse, your other half, and they have learning. It's all about learning. YPO is what can you do to become a better father, a better CEO, a better mother. If you're the female CEO, how do you become a better wife? How do I become the better husband? All those aspects is what YPO is, and looking for people that are YPOers. Because something has really shocked me recently is that 40% of the global network of miners in mining, both public and private, are YPOers, which really shocked me. And there's so many great people. There's like 4 chapters in Toronto. There's a big strong chapter in Montreal. So who are the members of YPO? I share with you in the gold space. My first university was the Yokohama in '92, and it was with Rob McEwen, and he's a YPR, and as you know, he's the guy that built Goldcorp and then went on McEwen Mining. People like him, if you've not interviewed, interviewing him because of that YPO experience creates a uniqueness of learning from each other. It's all a learning organization. And I think that's what you want to try to focus on. And there are so many I can give you. Marcus New is one of the directors of HIVE, and he's a YEOer, Young Entrepreneurs Organization. And you have to start your own business to be a YEOer. In YPO, a third are professional CEOs, a third are second generation, and a third are entrepreneurs, gunslingers, they call them. And I think that YEO is another sort of way of interviewing those people about how they share information and prosper in a global economy.
Well, Frank, I really appreciate those list of names. It's funny that you mentioned Rob McEwen because I actually had him on the show. So I really, really appreciate that. And if we could just go further, Frank, if my listeners, are trying to find out more about your work or kind of, follow, what you're saying and kind of doing, where's the best place for them to go?
Well, I think you go to usfunds.com and you click through to subscribe to Frank Talk. That will give you a flavor for my travels and observations I make as a global investor and other sort of interesting factoids. My Twitter handle is Bulldog Holmes, and that's because Bulldog was the mascot for my high school, and I played Leonard Null sports, so I was called the Bulldog for defense.
I love that. So yeah, no, I'll be sure to put that in the podcast notes. That way all my listeners know where to go. And I just want to take this last bit of time, Frank, to really, thank you for being here. Thank you for your time. Thank you for your wisdom. And thank you for everything that you do right now for the finance world.
Oh, you're very kind. And so let's keep in touch, and I'll get some other ideas for you to interview. Roy Terracina is my vice chair. He would be just a great person, mentors a lot of young people like you. And he's also a YPOer, was the chancellor for the largest Hispanic school in San Antonio, has done LBOs, now doing a technology deal, and does a Golden Gloves boxer, and still boxes in his 70s. Every day gets in the gym.
Wow, I love that. Well, that's a lot of different things, and he sounds great. So I appreciate you for that recommendation there, Frank. That bonus one. And thanks again for being on the show today.
Great. Take care, my friend. Have a wonderful summer.
You too.